Hello and welcome to the Three Corners Capital monthly video for the month of May 2026. And today, Chris and I want to talk about, some recent headlines with you. One is around, the Trump IRA accounts, which is a brand new thing. And so we want to dissect that and just cover some of the basics, but really get into, post-tax deadline planning around IRAs and related topics. And then also, we're going to talk about energy security, with what's going on in the Middle East, a lot of concerns, a lot of volatility and uncertainty, and how this is affecting, consumers and businesses around their thoughts around how they source energy and things along those lines. So let's get it started.
Let's go.
So, the Trump IRA accounts is a good thing. There's been a problem for many, many years in our country around, getting people to participate in retirement plans. A lot of low income earners do not have access to a retirement plan at work. And so the Trump IRA plan is to, it creates a $1,000 match or what they call a saver's credit. And this goes back to a law actually passed in 2022, but it hasn't been fully flushed out. And so this executive order is really, putting some more momentum into it. And so it's a good thing. Now, there are some caveats, one being, age and income limits. I think you have to be 18 or over. Your income, if you're single, I believe, they're talking about 35,000 or so. If you're married filing jointly, it's 70,000. And so, it's basically just a regular IRA account. But, for people who don't have a match, this, $1,000 match can really go a long way.
Yeah. Yeah. And I think from practical experience, one of the things that I would just offer up is it's really not going to impact our clients.
Right.
Our clients are working at places that offer 401ks, they're contributing, their incomes are higher, but it could impact our clients' adult children who might
Right.
be working while in college or shortly thereafter. So that I would keep that in mind. The other piece from our experience, having advised on 401k plans and simple IRA plans for businesses, a lot of times we encourage participants to look at their ability to save for the long term relative to their immediate short term needs. Most people in our country don't have a lot of emergency savings. And I
Hmm.
think generally we would say, hey, before you put money into a retirement plan that has penalties and taxes on a withdrawal, build up some security, in your
Hmm.
own savings first and go from there. But I know you wanted to hit on for our clients and for the people that are listening in to, financial advisors, you're probably at a place where you're like, okay, that's not applicable to me. So what are some of the
Right.
things that we're focused on this year for people?
Yeah, for people who just finished their taxes, there are a lot of times we get questions around, well, gee, should I do, IRA contributions or, which is pre-tax, or should I do pre-tax contributions to my 401k? What about the Roth component? And so that can be, a really tough decision for people because you want to, save as much as you can on taxes near term, but you have to realize the value of Roth money long term. And so it really kind of depends on your situation, what your income level is, and so forth. The other thing that we're doing a lot with clients is, planning around Roth conversions, converting IRA money into Roth money, which can be, costly. But for many people, especially when they're, in between work or they just, work in retirement or work in Social Security rather, their taxable income might be low. And that opens up a window for converting IRA money to Roth money.
Yeah, and one of the big reasons why we talk about that is, um, when you think about the required distributions, that
Mhm.
artificially increases people's taxable income, and that was the whole point. You get the pre-tax deduction while you're working, kind of
Right.
in the years where you need it the most. But the IRS, of course, wants to ultimately start
Mhm.
to find opportunities to tax that money, and that's what the required distribution is. And that can, again, for someone that's retired, or start to increase their taxes. So pay taxes now in those brackets that
Mhm.
are lower. And then when you're RMD age, you don't actually pay as much potentially in taxes. But we also get into lifetime total tax
Mhm.
because of the Secure Act rules that now require non spouse beneficiaries 10 years to take withdrawals.
Right.
You pass on an IRA to your adult children who are working, they're probably in a higher tax bracket just by nature of working versus someone not
Mhm.
working, and then they have to take that out over 10 years. So that's a big piece. But I know there's another part that we've maybe not touched on as much with clients, and I know we're going to start doing that more this year, is the idea of what happens with a
Mhm.
large IRA when a spouse passes away.
Yeah, yeah, no one likes to talk about, that eventuality, but, or that possibility, but, all of a sudden, if you're filing singly instead of, married filing jointly, your tax brackets change and, your taxes go up, and so that's something to really, be aware of, and, proper planning and preparation, around, your customized plan is really important for those situations. The other thing that for people who are in RMD stage is the qualified charitable distributions as a way to,
Mm,
reduce your taxable income, and that can be, really effective. And actually, people can do that, even starting at age 70 and a half.
yeah.
So they didn't change that. They, changed the dates, the ages where you have to take money out, but they didn't take away the qualified charitable distributions, which you can start at age 70 and a half. So that's nice as a way to, reduce your, like Chris said, your total lifetime taxes over time.
Yeah, that's a great way to give to charity. I mean, I think you would agree. I mean, really for anybody in that 70 and a half, but really required distribution age, if you're going to give cash,
Mhm.
giving a QCD is actually the better ultimate way to go versus
Right,
paying the tax on that.
right.
Um, well, I know another thing that we've seen in the headlines, obviously, is the war in Iran and the
Mhm.
impact on energy prices. And I think we wanted to dive into a conversation around, what like energy as a commodity looks like, but also this idea of energy security. And so we've seen lots of headlines like this that talk about how electric vehicle demand is starting to increase, or at least the interest in electric
Mhm.
vehicles. And admittedly, I drive an electric vehicle, and I got it after the subsidy was turned off. But I did it because the convenience,
Mhm.
the cost of charging at home, the technology that's in these cars is
Mhm.
just, I mean, they're styled pretty cool,
Mhm.
and it's really quiet, so it's a great drive. And, but one of the things that I've had in some conversations, people are like, "Oh, I'm paying 4.99 a gallon here in
Mhm.
Ohio, at least." I know my friends out in California are paying a lot more,
Right.
but, but I'm like, "Oh, I charged once this week, and on average, it maybe
Mhm.
cost me about $7 at home to charge." So it's just I think there is
Yeah.
a real demand and interest in there. But obviously that gets politicized, and our goal is not to get into that's not our lane, is not to get into
Mhm.
the politics of it. But I think the reality is there's a lot of information out there that I don't think people fully understand and appreciate around energy, and where things come from. And so this next slide I think is really helpful because it actually looks back at the last several years and the U.S. Oil production.
Mhm.
And again, we people politicize this across political parties, but the reality is we have been a growing under multiple administrations, a growing producer of oil and natural
Mhm.
gas. We're a net exporter now.
Mhm.
We're one of the largest, producers in the world, and people don't know that. And I think that's something that's important because we talk a lot of times about the price of oil or gas as it relates to what we fill up our car because it's the most
Mhm.
relatable to us. But it impacts a lot of things I mean, medical devices and all kinds of things that are byproducts of oil
Mhm.
that also impact businesses and the costs of doing business and what we pay for other products and services. And so I think, that's why this is such an important discussion
Mhm.
globally because it's not just an American issue. It is an issue across the world, but it also ties into just the volatility of the
Right.
commodity. And this
Mhm.
chart also does a good job of looking at the highs and the lows. And it's one of the challenges too when people talk about, well, should we buy that? There's a war. Should we buy a stock in an energy company? And it's like, on one hand, yeah, the case is there in terms of the short term piece, but the reality is commodities are the old adage is are meant to be traded and not held. And
Right.
part of the challenge is you can have a great management team at a publicly
Mhm.
traded company
Mhm.
that's involved in the energy space. but at the end of the day, their stock price is going to have a big impact based on the
Right.
price of the commodity. And so you can have a great CEO, great team, and just by nature of
Right.
an event that is out of your control impacting. And so when we think about portfolio construction, I know that we have to think a little bit more beyond just the basics. So I don't know if there's
Right.
anything you'd like to
Yeah.
add to that.
Yeah, well, it's fascinating because, the other thing going on over the past several years has been the build out of artificial intelligence, all the data centers
Mhm,
and the semiconductors that go into those data centers, all the power needed, the water usage. And, what we're seeing is a lot of these hyperscalers, the Microsofts and Googles and Amazons of the world are saying, hey, we're going to build our own power sources. And it's going to be a diversified thing, nuclear, geothermal, solar, wind, as well as natural gas. That's, I think, what's one of the themes coming out of the
mhm,
recent unrest and conflict in the Middle East is, companies and consumers are realizing, gee whiz, what can I do to not be affected by these things that come out of left field? And a lot of businesses are, have been, despite the kind of political noise recently, have been wanting to build up their renewable energy sources because, it's so much more cost efficient.
mhm,
And, the next slide is really fascinating looking at the primary energy consumption by source for different countries. And you can see, China, I mean, the manufacturing kind of center of the world. If you look at this chart, uh, coal is how much they're using coal is bigger. They're producing more, energy from coal
mhm,
than the United States, all of our energy combined. So it's really fascinating. But when you look at, the blue in the chart, the renewables and other clean energy sources, it's really growing and growing. And this chart is, from 2024. And, if we looked at a recent chart, it would show that it's even continuing to grow. And so I think, the theme for investors and for us is, be diversified in your portfolio and be diversified with your energy sources
mhm.
to mitigate, these things and have more control over, how we're producing energy.
Yeah, and I think, the when we think about the word energy security or the term energy security, um, we throw that around in terms of, again, oil and natural gas. But the reality is, to be truly energy secure, we need to diversify our supply sources.
Hmm.
We can't always rely on oil and gas, and especially because it's a finite resource, the cost will continue to increase. I mean, just pure economics, supply goes down, and demand goes up, prices increase.
Hmm.
And as countries around the world are looking for ways to manage energy costs, and to become resilient, and to become energy secure, the real conversation is you have to look beyond just these traditional sources. So it's
Hmm.
not a political thing. It really is just a byproduct of the future and where we need to be thinking
Right.
from that security standpoint. And the reality, and you alluded to it, is most of those renewable energy sources, they're now on an unsubsidized basis, just cheaper
Hmm.
to bring to market. Now, it's still the pre-existing infrastructure is cheaper, but for new
Hmm.
infrastructure, the renewable pieces, and again, people think about wind and solar as the one that gets talked about the most. And yeah, the sun doesn't always shine and the wind doesn't always blow and all of that, but there's hydro and there's
Hmm.
geothermal and there's a
Right.
lot of other forms of energy that are being explored and implemented not only at a kind of a national level, not just here in the United States, but around the world, but also at the home.
Hmm.
Things
Hmm.
that people can do
Right.
to lower their costs or to get credits from an energy provider, and reduce their cost of living. So I think that's a financial planning impact long term. And I know in our next monthly
Hmm.
webinar for clients, just on some interesting topics, we're going to have a speaker talk about what can we do as individuals at our homes to be more energy efficient and
Right.
save on costs.
Yeah. Yeah, and what's also huge is the ability, you mentioned the solar and wind, they're not always reliable as a natural gas, but with the increases, the improvements in battery technology,
That's true.
you can, have solar panels on your home or your business and, you know, you can actually have excess power stored in a battery. And so it's just, and connect that to the grid. It's just really makes for a much more efficient, electric power sourcing for everybody.
Yeah. And, like any technology, in energy or otherwise, I mean, it's like I remember when my wife and I bought our first flat screen TV, early in our marriage. It was like,
Mhm.
I mean, I hate to say this publicly, but it was like $1,400 for like a little 36-inch like flat. And we thought we were so cool riding,
Yeah.
the old saying, riding high on the hog. And now you can go and get a
Right,
55-inch LED, everything, whatever,
right,
for like 300 bucks.
right,
And
right.
I think that's the other piece to any technology. And it is, we need to make these investments. And I think from our standpoint as advisors and looking at money managers and how we deploy money in a portfolio, there will be winners in this space. I mean, long term, again, not just in the next year, but when
Mhm,
we think about the next 5, 10, 15 years, um, we need to think bigger. We need to look for where the
mm,
puck is, as Wayne Gretzky said,
right,
skate to where the puck is going. And we need to look
mhm,
for ideas and opportunities that I think can add value long term when we think about kind of, again, a global world of investing in the companies that are creating some of the tools, technologies, and services that will make resources much more efficient and optimal to meet the needs of a growing global society.
mhm, for sure. Yeah, so that's, this month's video, and be on the lookout for, as Chris mentioned, our video with an energy efficiency company talking about solar panels and other things. So, thank you for joining, and take care. Have a great day.